What's up, guys? How's it going? Another episode here. This episode, I want to specifically cover the swing trades that I've talked about in the past previous episodes, and wanted to kind of. I know I've said before that the money. I don't really want to focus on the money side of things, and I don't want to have everything be about how much money I made or lost in a day, because really I don't, at this stage of my game, I don't want to judge my performance based on how much money I made or lost. I want to judge my performance based on the entries and exits of my position and whether they made sense in the big picture in regards to technical analysis of the price chart and the supply and demand of specific stock, and whether it was a good entry or exit point. So that's what I want to judge my entries and my. That's what I want to judge myself on as to whether I'm performing well or not. Now, that being said, I do need to still be making money to pay my rent at this point, and I know people want to know how much I make or lose in a day, because it's just no one's going to watch the videos if I never talk about how much I'm up or down a day. So that being said, I will be letting you guys know my status every day, how much I made or lost. Now, that being said, I am currently paper trading, day trading. We're going to get into the difference in this video between the difference between swing trading and day trading. But paper trading means you're doing fake money. It's practice. In my day trading account, it's currently paper trading. I do have an account with a leveraged account with real, that's live money, that I'm going to be starting next week probably. We'll see how this week's goes with the day trading, but for this week at least, and maybe 2 more weeks, I'll be day trading paper money. So any of my wins and losses for day trading will be paper money. Now, if I say it's a swing position, then that's real money. So, and my wins and losses in this video will be swing positions, and that will be actual wins losses. Now, I'm not going to get into all the exact amount that I've got to get on, because I swing my options from my phone. I'm not going to get in there and prove to everyone and go through all the exact amount. I'm just going to give a general up or down of if I'm positive and by relative about how much. All right, so that's that. So swing positions. Let's get into the difference between um, swinging and day trading. Now, a swing position is simply a stock that you buy and hold overnight. So day trading, you buy it and you have to sell it in the same day. If you do not sell your position and close out and convert the stock into cash, then that becomes a swing trade. And a swing trade typically lasts, like we said, over 2 days to 3 months. But most swing positions that a lot of people do on 2 days or about a week is most typical, a week to 3 weeks. Everyone's different. There's a million different strategies in the stock market. So that's swing trading. So let's get into the swing trading now. Like I said before, you always want to take the the overall market direction when we're trying to swing trade, guys. We want to keep in mind the overall market, because we are in any type of trading, we want to do this. So as we talked about in previous videos, here's the spider ETF. This is a daily time frame. Now, if we zoom in, I had talked about in previous videos that this 167 area right here, where we had tried to break out once and twice, and we have broken it and came back down and tested and came up, and we are sitting here coming in on Friday, coming into today. And I had said on the video that as long as I expected a pullback to this area, and as long as we stayed above this line, we were going to stay, the bulls would stay in control. Guys, if you don't know, this makes things easier. When someone says the bulls or the bears are bullish or bearish, it's very simple. All it means is a, a bull is somebody who wants the stock to go up. A bear is somebody who wants the stock to go down. So if the stock market is bullish, the stock market is going up. If the stock market is bearish, the stock market is going down. If somebody is bullish, they think the stock is going up, and vice versa. So that's cleared up. So as long as it is over this white line, it's a bullish trend. So with that being said, all right, guys. With that being said, I want to get into my swing trade position. So having said that, where I said we would stay bullish unless we pulled under this line, let's just get down to it. I cut loose my swings in CGC and NVDA. I let them go. I sold them. I basically sold out of the stock, and I sold out before we pulled back and made this run. Okay, because I wasn't paying attention. I wasn't paying attention enough to the market. I wasn't paying attention to this level down here. If I was paying attention to this level, I would have felt completely comfortable with any type of pullback down further. And as you can see right here, it actually bounced off the 200 EMA, this purple line, to a T. So I let my CGs, and if we look at CGC here, it ended up running up, and I sold at the open, which was somewhere in here, but it ran up. I could have sold this over, these are the lines we had on the other day. I could have sold this up over this breakout. See, it did break out, but it pulled back down. This is the daily chart, guys. This is today. So it broke out, and it came all the way back down. So, yeah, I could have made money on that, but I sold it early at the open because of the price action. Let's go to today's price action, and let's see that. So it just came in with a bunch of chop, and I really shouldn't have been shook out or nervous here at all, because you want to keep in mind the average true range of the stock. So that's the average amount. An average true range, or ATR, as you can see, I have it over here on this side of the screen. So CGC's ATR is $2.79. That's the average amount of dollars that you can see it move in a typical day. So right here, the ATR is only 85 cents, and it was chopping around the VWAP, and we'll get in here and show. Oh, and so basically I let it go. Once it broke under the VWAP right here, the volume weighted average price, I sold it. Right, I sold it on the second candle near the VWAP before this big drop, and I got shook out. So, and it ended up running. So it ended up running pretty big, and now it's sold all the way back down off. But this is why I was so cautious with that, and I got in early, and you can see that was a false breakout here. So, and this is the danger of these stocks, guys. So because it hadn't, the point of this is because it hadn't with if we look at the SPY at the time, this is the ETF. The SPY hadn't even come close down to this white level at all. I mean, it's just chopping around the VWAP, and it's just consolidating. It's due for another run up, like we had talked about, and I basically shook out of that trade early there. I should have been more calm. So I should have held on to that one contract and sold up here, but I shook out early before it even showed me its range on the day. It was just chopping around. So sold that for a $30 loss on the contract. So in total, so let's go. The next trade was NVDA. So the NVDA guys, NVDA had a good run today. Let's go back to the 20-day chart. All right, I gotta hurry this up, run out of time. So we can. I bought 2 contracts in here. Okay, this is a huge gap down. I bought 2 contracts in here, gapped up the next day. I sold one for an 80% gain. I had one riding. I failed to mention this in other video, but I added another contract here, and these are just options, guys. But for now, we're gonna keep it simple. I'm not gonna get into details, but I'll just give you the overall profit loss at the end. So sold that contract for a, an 80% win, and then I added one here, and I actually sold both up here, thinking that because I was up 150% on my other contract and 50% on the one that I added in here, so I was up huge. I basically, in my Robinhood account, I had $700 in it last week, and now I have $1,400. So I'm up over 100% on the week in that contract. And yeah, I could have made thousands if it closes this gap, but after a $700 win, and you can they were out of the money calls, so that's a big to go up over 100% on calls that are out of the money. That's big. Yeah, if they went in the money, I would have won huge. It's like winning the lottery, guys. But I don't want to at this point in my game. So I sold out of these. I've been trying to do something different. I sold into strength. I sold right here at the very top at 149.66 or 67. Literally the very top I sold. So yeah, I did the same thing. If we go to the 20, so when I first bought them, sorry guys. So when I first bought them, I had sold right here on the first one. So I'm getting into this thing of trying to sell into strength instead of wait for pullbacks, because in the past I've just held up to here and then I've just always watched this big drop, and I don't like doing that because a lot of times they won't even ever come back. So, and also with the options, the price jacks up as it's moving in the direction of your strike price. The price will move up, and then as it moves down, it moves kind of exponentially. So it's better to sell into strength with options as well and with stocks, especially if you have bigger share size. So that's an NVIDIA trade, up 100% in my Robinhood account. After that, I closed out. The only other options I have left are these USO options. So with the USO, I'm running out of time here. Let's go to the. So, like I said before, I had, looking at the oil, I had bought here and added. I bought 6 contracts long here, $12 strike, and added here. And as you can see, we have these trend lines. As you can see, we broke this. We came down and broke this trend line, and we went straight through it, and we bounced off this now support, which was resistance line. And I actually thought about buying shares here, but I'm down on my position at this point because they're options. I bought right here most of my position, and I thought about adding, but guys, and another thing is this is highly institutionalized. This is oil. It's traded by big banks, so that's why it's dropping like this so much. And options decay over time. I don't want to hold my contracts if it's just going to chop, but I'm still holding the same contracts. I'm about break even right now on those. So thanks for tuning in.